So, we are going to start with internal audit. I want to believe that's what I had promised.
Yes.
Let me share the screen shortly. Can you see the screen?
Yes.
Yes.
Hello?
Made it.
Paulo, you are welcome.
Thank you, sir.
Can you see the screen having internal audit?
Yes, sir.
We can see.
Okay. So, good evening, members.
Good evening.
Good evening. How are you, sir?
Fine. How was your week?
Very fine. How are you?
So, we are starting with 3 members, I believe. I can see 2, Paul and a colleague. Not so?
Of course.
Very good. Did you attempt my assignment?
Assignment of what?
The one I sent via
email.
the past papers.
Actually, I've not seen them. Maybe you didn't send to me. You sent.
Paulo's email was outside. You know, I used the list of the members who registered last Sunday. So so I gave someone to send the email to those very people. I forgot about Paul. So that was the list I used. I thought it was exhaustive.
So I beg you, send me to.
I'm going to forward to you immediately after the meeting. So internal audit is one of the areas you can actually score very well, and you increase your chances of passing. Internal auditing is an independent, objective, assurance and consulting activity designed to add value and improve organizations' operations. Yes. So an internal audit function is run by the head, who's known as the chief audit executive. So the key feature on internal audit, the CAE, the chief audit executive, must report to the board, and that is the audit committee of the board. Then must also report to the senior management. That could be either the CEO or general manager. So that, in other words, internal audit involves what we call dual reporting relationship. So there should be a functional reporting to the board, and then administrative reporting to the CEO or senior management per se.
Mm.
The intention of having the internal audit report directly to the board is to enhance the independence of internal audit, such that their objectivity is not compromised. So we are saying internal audit involves two activities: assurance and then consultants.
Internal audit.
According to the definition of internal auditing, it is an independent, objective, assurance, and consulting activity.
To add value.
Are you there?
Yes.
We are there.
Consulting activity designed to add value and improve organization's operations. So, assurance, under assurance, the internal auditor defines the scope of the work, sets the objectives, and the objectives of the internal audit work are based on the risk assessment. So in other words, every internal audit activity must be preceded by risk assessment, which is reflective of the risk-based internal audit plan. So it comes back to planning as well. Even if you are in internal audit, you are expected to what? To plan. Now, assurance would be like the core business or the core internal audit activity. But then sometimes management seeks advice from internal audit. Now, when you tend to go and perform duties which have been requested by management, it is referred to as a consulting activity. You are acting as a consultant. Yes, because your principal purpose is to offer assurance on risk management of the organization, governance, procedures, and then control. That's why some people refer to it as GRC. GRC is governance processes, risk management, and control effectiveness. So, internal audit is also a regulated function, just like any other audit. And the standards which internal audit activity is supposed to follow they are called IPPF, which defines the purpose, first of all, for the internal audit activity. So the purpose of the internal audit activity is to provide an independent, objective, and objective assurance and consulting services designed to add value and improve organization's operations. So in other words, the purpose is benchmarked from the definition of internal auditing. Okay. So under purpose, usually there are three parties involved in the internal audit. You'll have the process owner. Process owner can be an individual or a group or an organization or a department. Okay, or a system. So in other words, the process owner is the one who is responsible for the activity you are going to evaluate. Then you'll have the internal auditor who's going to carry out the assessment. And finally, the user who's going to the user is also a person or could be a group who is also like a beneficiary for that process directly. So assurance services range from financial, compliance, systems, among others. Okay, are you with me?
Yes.
Consulting services, as I said earlier, it is simply advice It could be training. You are going to train some staff. It could be maybe appraisal on a project. Maybe the company is considering investing in a certain project, and they think internal audit can have any assessment regarding the risks associated with the project. So the key feature also under consulting, the objectives and the scope of the engagement is defined by both the auditor and the management, or the person who has assigned the auditor the consulting activity. Whereas the scope of an assurance engagement is defined by the auditor himself or herself. Authority. Now, like I said from the beginning, internal audit is expected to report directly to the board, functionally to the board. That is through the board audit committee. And to achieve that, there is what we call internal audit charter. The internal audit charter,
Okay.
the internal audit charter is the one which gives internal audit authority in the organization. The status in the organization, they are defined in the internal audit charter. It is in the internal audit charter where you are going to include statements like unrestricted access to all staff and records. It is in the internal audit charter where you are going to put the policies and procedures, actually the mission of internal audit. So basically, the internal audit charter is a very key document as far as internal auditing is concerned. It empowers the internal auditors. Responsibility. Responsibility as part of the standards requirement, the IPPF, the internal audit activity must evaluate and improve the effectiveness of the organization's governance, risk management, and processes, control processes. Okay. The other area we are going to look at are the ethics. So the ethics of internal auditors are not far different from other professionals like accountants.
Okay.
We have the standards provide for basically for the IPPF provides for integrity, objectivity, confidentiality, and competence. So integrity, it is a refusal to compromise professional values for a personal gain. Okay. In other words, you are expected to perform your duties in accordance with the applicable relevant laws. So an internal auditor is simply expected to abide by all the applicable laws, and also maintain the cardinal principle of what? Honesty. Okay.
And justice.
And justice. Thank you, Paul. Objectivity. Now, objectivity, it is not so far from what the IFAC code provides. It is simply a commitment or not to provide unbiased information. Yes, pardon. Is it Paul?
Yes, avoiding bias and coming up with professional judgment.
Very good. Very good. So then the other is confidentiality. So confidentiality, like what we said, you need to protect the information. You respect the confidentiality of the information, such that the information is not disclosed for any other maybe private gains. So that is not acceptable. Competence. I think competence, you have interacted with competence several times. Pardon?
Okay, yeah, it's okay.
Yes, it is about the having appropriate level of knowledge, skills, and what? Experience.
To carry out work.
Yes, like I
In a
informed you last.
professional manner.
Like I informed you last time, knowledge is derived from the qualification one holds. So, in other words, members of internal audit should at least possess maybe professional qualifications like CPA, CIA, ACCA. So that is the beginning of competence, knowledge level.
Yes.
So having acquired the knowledge, then the skills, of course, come in there and the experience. So the standards require that the internal auditors on any internal activity engagement need to be competent. And actually, the standards discourage internal auditors from engaging into an activity where they are not competent.
Competent skills.
So, factors to consider before you rely on internal audit work. Hello?
Yes.
We are listening.
Who can remember the standard?
The standard of that is ISA 610.
Very good.
Lying,
Mm.
ISA 610, lying on work of internal auditors by the external auditors.
Yes, very, very good. So that is the...
Excuse me, Stephen.
Yes, yes.
Are we supposed to know those standards in our heads, or
You you
please
are...
don't laugh? Because I'm just doing NEPA in June. I'm new in it. I'm not doing much, so
Yes. Now,
I always know them in the head.
now, the knowledge of the standards gives you additional credit.
Okay, when you're answering,
Exactly. So it causes you to score higher than the ordinary.
Yeah, so it's the same approach as financial reporting, where we put in the
Yes.
standards according to
Exactly.
IFRS 14.
Very good.
So even here, you have to consider the standards.
Yes. If you know the standard, please do not leave out marks. Quote it. But
Okay.
what I strongly discourage, if you don't know the standard well, don't quote. Because if the ISA is 610 and then you are quoting 500, so you are going to be annoying the examiner. In other words, when you are sure of the standard, I encourage you to quote.
Okay.
You do not have to master all the standards, but you can grasp key ones which are easy and the common ones.
For us, so the ones that doing now, it's like everything is new to us, so that's why I have to ask.
No, you are very right. You are very right. Okay. So the standard ISA 610, as Paulo said, offers guidance on considerations external auditors undertake before they rely on the internal audit work. Okay. So one, you as an external auditor, you need to evaluate first of all whether the internal auditors possess the necessary proficiency acquired through adequate training. Hello.
Yes.
Proficiency is about who can explain proficiency? Any trial? The meaning of proficiency.
Proficiency is like knowing something. You have the knowledge about something and you execute it with proficiency lies in hand with experience with the factor. Being you do something at with high experience and on time, within the reasonable time. There is no like trying, let's try this point 1 to 10.
Okay. Winnie, can you also try? Hello?
Hello, I'm around.
Yes, we are looking at proficiency. What do you understand of the word? How do you understand the word proficiency?
Like when the hello? Like when the interpreters have they know what they're really doing. They are efficient and effective.
Okay, they know the knowledge. I mean, they have the
They know
knowledge.
that knowledge.
They have the knowledge and the
Yes, and how to
competencies.
apply.
Yes, and the competencies
Yes,
required to perform the work. Very good.
the work.
The other is,
Because
mm,
you
yes.
see, and sometimes in real life right now, our Uganda,
Mm,
some people can internal auditor someone who is not qualified or without any degree in accounting, as
mm,
long as they show him or her what to do, like just compare this with this and you're getting it.
mm.
When in actual cases people are not qualified. So and it happens out in most companies.
That is very true.
So yes.
Okay. So you, as an external auditor, you have also to evaluate whether the
They are
work of
qualified.
the work of the junior staff is properly supervised, reviewed, and documented. You can inquire. You can actually ask for their
Their
audit,
qualification.
even the audit files. They are temporary audit files. You
Okay.
check through their audit programs, their working papers.
Mm,
So in so doing, you are
mm.
trying to understand whether to evaluate whether the senior
Mm.
actually supervises and maybe they review the work done by the junior staff, so that
Okay.
you you get to believe that the quality of the internal audit is actually reliable. Then you need to question yourself and see whether they inquire and evaluate whether the internal auditors are usually based on sufficient appropriate evidence before arriving at conclusions.
Mm.
There is a company I know, the internal auditor
Mm.
came early in the morning and then uh, saw a certain staff with a girl, with a lady. The lady is also a staff. So
Mm.
they were standing together in the office. Then I
Mm.
think the lady touched the man's shoulder. The auditor
Mm.
went and wrote a report that there was sexual harassment. Wrote a very big report. Huh?
That is
So
bad.
before you know it, when they reached the hearing and what have you,
Mm.
the victims denied. So there was no footage.
There was no evidence.
Yes. Of course you can mute. So you really, as an auditor, you really need to have sufficient appropriate evidence before arriving at a
Yeah,
conclusion.
and
If you come up with conclusions prematurely, it impacts on your integrity. It impairs your integrity. Hello?
that's true.
Mm.
Yes.
So the reports prepared must be consistent with the work performed, and then
Okay.
you also need to evaluate maybe the past experience you had with them. You may find that the internal auditors are actually colliding with management. They are part of management. Sometimes
Yes. I think
when
it's very common.
you may find an internal auditor who is very friendly to a person in finance. Mm? And there is that kind of maybe collusion,
Conflict of interest. Actually,
conflict
it
of
is
interest.
very common everywhere.
Yes, Robert.
Yes?
You are saying something.
Not me.
Okay, who was? Let me see. Okay, so the internal auditor may even attend a funeral of a staff in accounts. The accountant is a person, might person. So indeed, they are really staff. They know each other. There is already that possible threat.
Yes, it is
Mm.
it's a high threat.
Mm. So as an external auditor, you also need to evaluate the scope of work performed by the internal auditors and also understand whether they have objectivity. Some internal auditors may be possessing bias. They only review certain areas where they have interest. Maybe based on the targets they give them, and they do not look at other areas. Sometimes you find internal auditors focusing on only fraud risk. But there are so many risks which could be eating up the organization. You get? Hello?
Yes, we are listening.
Mm. So the responsibility of an external auditor is to express an audit opinion. So you have to bear that in mind, that if you are relying on the work of internal audit, the ultimate responsibility is on your part. Okay.
Okay.
Examples of work which the external auditor can use. Testing of operating effectiveness of controls. Usually internal auditors are with the organization for a long period of time. They are actually employees. They know the controls, so they can help the organization to test the what? The controls. Okay, I mean not the organization. They can help the external auditor with an evaluation of the controls because they do test them on a periodic basis. So it enables the auditor to assess the what? Control risk. Usually end of year accounts and maybe half year accounts can also be witnessed by internal auditors, because as an external auditor you might be busy and then you rely on the internal auditors findings. Okay, tracing transactions, testing compliance. If it is a bank, if it is an insurance company, if it is a telecom company, those regulated companies. Internal auditors usually test for compliance. They carry out compliance audits, so they can give you an indicator on where possible non-compliance is manifesting. Okay.
Okay.
Sometimes, okay, we are going to look at group audits. I think next Friday. We might be looking at group audits. So when we reach group audits, there is a standard called ISA 600. ISA 600, it is a standard which is offering guidance and procedures to an external audit. sorry, sorry, to an external auditor regarding the reliance on work of component auditors. The subsidiaries, associates, and those other investments of a group company are referred to as components according to the standard. Okay. Hello?
Hello, we are listening.
Yeah, you see, these online meetings are very interesting. You can be talking to yourself. So usually they coordinate the activities, they communicate about the timing, the nature of the work, the audit coverage, materiality, proposed methodologies, documentation, and reviews. the internal auditors usually communicate with the external auditors. Now, there are those areas we call significant judgments. As an external auditor, you are not expected to rely on significant judgments made by the internal auditors, because the significant judgments are based on an individual's professional judgment. Professional judgment varies from an individual to another individual. Examples are assessing risks of material misstatement, evaluating the sufficiency of tests performed, evaluating the appropriateness of the going concern assumption, accounting estimates like depreciation, among others, impairment, adequate of disclosures, among others. Then the internal auditors are also not expected to provide the direct assistance in performing procedures such as making significant judgments, okay, also assessing risks of material misstatement, and they are not supposed to directly, the external auditors are not supposed to directly copy the work of the internal audit. They are supposed to evaluate it, okay. You are not supposed to direct, the internal auditor should not directly be on your team as such. So there are certain considerations which are necessary before you set up an internal audit function. The status. Is it a private company or public company? The scope of work. The nature of the products and services. Objectives and strategies of the company.
Excuse me, Stephen.
Yes.
How does the status of the company determine the internal audit design function?
Oh, yes. Now, like I said earlier, the core feature of internal auditing is reflected in the reporting framework. The internal auditors are expected to report functionally to the board. Now, if it is a public entity, for example, what should be the reporting relationship? You have to define it. If it is a hospital, if it is a government hospital, or if it is a local government. So those are the considerations. Where should the person report to? Okay. And then how many should be involved in the department? In other words, the number of the maybe staff. Now you are carrying out to a job evaluation, a job assessment of the internal audit activity. Now you will agree with me that public entities, the scope of work for public entities is far much different from private entities. Now it is also viewed in the angle of regulation. Now there are those companies which are what? Listed on maybe stock exchange.
Sure.
Yes. Now that shows that the risk profile, the risk appetite of that company is likely to be much higher than a private company. Hello?
Yes.
Yes.
Actually,
So if a company is actually listed, it could even be a requirement by the stock exchange in the various depending on the jurisdiction, that if you're a company on this market, you should set up internal audit function. Paul was saying something.
Actually, on the status, even those all financial institutions, they have to, it's compulsory to have the internal audit function. And if a company is following the corporate governance standards, one of the requirements should have an a department of internal audit function, well functioning independent of the management of the company.
Yes. Yes, and actually to add on Paulo's remark, now like for the banking industry, the internal audit is usually different from risk management. So there should also be that section of risk management. So depending on the state, but in a private company, you may find that the internal audit is still responsible for risk. Eh? So the design depends on the nature. Is it private or public? But also financial implications. Of course, you are going to pay staff. Yes, the objectives of the company, the product offered. Now, if you say nature of products and services, as Paul has said, this is reflective of the risks associated with the products and services.
The product, the living
Yes.
game.
Yes. Risk exposures. Okay.
Stephen.
Yes.
I want to ask something. There is somebody who was going through a scenario.
There is someone.
There is a scenario whereby the internal audit function or department reports in a dotted manner to the managing director. Now, however, it is meant to report directly to the board, which is okay. But you find that when you are having an exit meeting with maybe the department, and you've actually discussed the findings, you find certain institutions, some government bodies, whereby eventually you have to discuss the findings with the MD as well, in the presence of the responsible head of that department.
Yes.
Now, how do you balance between, you find that there are some critical, how do you balance between some critical issues which arise and the managing director does not actually want to see it go to the board, and yet you very much know that your contract is also subject for renewal based on the decision of the managing director or the CEO of that government entity?
Thank you, Mr. Oko. Tony. I'm going to start to. Yes, I'm responding. Can you hear me?
Yes, I can hear you.
Yes, I'm saying thank you. Let me start commenting with your last paragraph, where you say your contract is premised on the MD's approval. Not so?
Yeah, exactly.
Yeah. Now,
yes.
Yeah, thank you. So, what the standards require?
Okay.
Winnie, you are saying something?
No, I'm listening.
Okay. What the standards require? The independence of internal audit is enhanced when they report functionally to the board. By board, we refer to the audit committee of the board. Now, the audit committee of the board is responsible for overseeing the activities of the internal audit function or internal audit activities. The audit committee is also responsible for appointing the chief audit executive. So if you are the internal auditor, maybe who's reporting to the CAE, the chief audit executive, the head, you are still under protection by the audit committee. So in case you are the CAE, the chief audit executive, the chief internal auditor or senior internal auditor, by whatever name you possess, you are discussing your findings with the MD. In the ideal world, you would have already communicated with your audit committee chair. As a chief audit executive, you can actually make the audit committee chair your friend. Even before you go to discuss with the senior management, you have already shared some, just verbally, with him or her. So the challenge which I see in your submission, it is as if the MD determines the head of internal audit. Is that true?
In that institution, it is partially, it has an influence, partially.
Because actually, the administrative reporting to the MD is this: one, MD needs to know what is transpiring in the GRC, that is the governance, risk management process, and the control deficiencies noticed. Secondly, MD approves payments, what salary. You are like a staff, but then your remuneration or your contract is approved by the audit committee. So MD comes in just as the head of management on your part. So depending on the sensitivity of the matter, there are issues you can discuss with the MD. There are issues you can keep for the audit committee. Are you with me? Hello? And another thing, when your report reaches the audit committee, it does not actually now become your report. You should the audit committee takes it on. It becomes the report of the audit committee. So if there is a recommendation which management has failed to implement, management would have failed to implement the recommendations of the board, not you. Of course, are we clear?
Very clear.
Hello?
We're on board.
Someone should mute. Someone should mute. We want to look at the differences between internal auditing and external auditing. Any suggestion?
Yeah. The differences are there, they do exist.
Anyone to suggest?
Yeah, the differences between internal audit and external audit exist. Internal audit, they are found within the organization. Actually, they are part of the organizations. When you are counting the employees, they are part of the employees of the organization. External audit is independent, a separate unit of the organization. They are just hired to come and do the audit, and then they report and go back. Actually, internal auditors may be permanent in an organization, but external auditors, they are not permanent. After 3 years, they have to.
Of course, you can mute. Tony. Okay. Yes, proceed.
I was saying external auditors, they are there on a contractual basis. After they lost, the ISSA recommend that every 3 years you have to have new auditors on board. But internal auditors are there on a permanent basis. They can be there for many years as they are part of the organization. Even the reporting requirement, internal auditors report to the board, but external auditors, their reports are used for external purposes, maybe for when a company wants to be listed on a stock exchange. Internal auditor, they consider reports from external auditors, not the internal auditors too.
Thank you, Paul. Yeah, as Paul has said, those are some of the differences. Okay, in internal audit, they are actually part of management, part of staff, and those ones are outside stakeholders, external auditors. So the other is in internal auditing, it is a continuous appraisal process. While external audit, it is just a final audit, a one audit. Is that okay? Internal auditing, it is continuous. It is a continuous process. Then in internal auditing, the scope may be limited, but an external auditor, the scope may not. Okay. An internal auditor may decide to only look at payroll only for the whole quarter or even the whole year when he's only looking at payroll. But an external auditor, no, the scope is broader. Okay. In internal auditing, there is no liability to third parties. While on external auditing, the liability is there. When you express a wrong audit opinion, you may be what? Taken to court if investors relied on your report and they made wrong decisions. Are you there?
Yes.
Hello? Yes, the internal auditors get salary, external auditors are paid what? Fees.
Fees.
Activities, wait. Okay, these are some of the ways in which the internal auditor assists the external auditor. They are easy to read. Very, very easy, although not common. Objectivity. Objectivity is back. Objectivity and competency usually comes, it is common on the side of internal audit. Objectivity is the ability to perform tasks without allowing bias, conflict of interest, and influence of others. We have already seen this before. Is that okay?
Yes.
Now, an examiner may just pop in there with a question. Factors that may affect external auditors' evaluation of objectivity. So there are certain factors which are going to cause the external auditor to question or to query the objectivity of the internal auditors. Is that okay? To begin with is the organizational status of the internal audit function. Now, the first thing, organizational status of the internal audit function. How is the internal audit placed in an organization? The status. Do they report to the audit committee functionally or not? Okay. If they do report to the audit committee functionally, then you may think there could be some objectivity of the internal auditors. But if they are really reporting to management, there could be some bias. Who knows? They could be influenced by management in their reporting. Is that clear? The external auditor might also evaluate whether there are any conflicting responsibilities in terms of managerial, operational, which are conflicting. You find an internal auditor is preparing the payroll. Have you ever found one? I found one. I was very surprised. The internal auditor was the one preparing the payroll. Hello.
Hello.
Hope we are following.
We do follow.
Okay, good. So the external auditor also evaluates whether those charged with governance oversee the implemented decisions related to internal audit function. That is, determining the appropriate remuneration policy. So in this case, I had said earlier it should be the audit committee to determine the placement of the chief audit executive and even actually the appointment and removal of the chief audit executive is enshrined on the audit committee, including the benefits. Actually, the audit committee approves even the budgets, the worker plans for internal audit. So all that when you observe that is in place, you may think that the internal auditors could be possessing some objectivity. as an external auditor. Okay. The other thing, you might also inquire whether they are members of relevant professional bodies like IIA is Institute of Internal Auditors, then like ICPAU, Institute of Certified Public Accountants. So if they are members, you may also think that, oh, well, these guys might be possessing some objectivity given that they are professionals. Are we at par?
Yes.
Competence. Competence is also common on the side of internal auditing. We have already seen competence. It is not the first time. The attainment and maintenance of knowledge and skills. Okay. So, what factors does the external auditor consider to evaluate the competence of internal audit? You start from the internal audit function itself. As a function, who is the head? Maybe the profile of the head of internal audit. Sometimes can also determine the overall competence of the work being done. Because if someone is not able to review the work of the juniors, so the internal audit activity, its competence may be what? Questioned. Even how do they bring in the internal auditors? There are some organizations, as Winnie said, they just discuss, some MD calls the former OB in P1 and said, hey, my friend, in my company, I want someone in internal audit. Then the guy said, hey, but there's this guy who has just finished J6. Can be there watching. So the recruiting procedures are also key. The hiring, training. Some are recruited well, but then they are not trained. All those are gaps. So you may find staff in internal audit who do not even have any record of CPDs. Are you aware of CPDs?
Yes.
Winnie, do you know what CPD is? Winnie is out, I think. So CPD is continuous professional development. Robert was saying something, or hello, Robert,
Yes.
you were saying something. What is just
No?
feedback?
I'm following.
Oh, I think it is feedback. So you evaluate whether the internal auditors understand the business they are in. Okay. For example, internal auditors in the banking industry, they really need to know what banking is. Maybe even possess some qualification in banking. Short trainings, not as such, but demonstrate that they have received some training on banking knowledge. Okay. Still, just like objectivity, membership to relevant bodies. Relevant bodies, I'm referring to those professional bodies, could be IIA, ICPAU. Okay. Advantages of internal audit function. Errors and fraud are prevented. Sometimes independent reviews normally detect the fraud or error. Just even if the existence of the function itself, it could simply deter a certain unfavorable action taking place. Probably people just fear internal auditors. So maybe unethical behavior might be prevented just by the existing of the internal auditors. The key advantages you have here are sometimes they help to identify the weak controls, internal controls, before the external auditors, and then the external auditor will have shorter time to make the assessment. Okay. They do appraise the internal control systems on a continuous basis. They monitor the organizational strategic plan, the goals, objectives of an organization. They do monitor and report accordingly. But now, like we said earlier, the internal audit function is costly to set up. So that might discourage some companies which are not highly regulated to have an internal audit function, because it is a support function which can be avoided. So you would compare the benefits alongside the costs involved. Like we said, the nature of the services, the size, and the skill, all those will have an impact. Hello?
Yes, you're on board.
You on board?
Yes.
So what you should also know that internal auditors, they perform a range of activities. I think we have already talked about that. They carry out value for money audits. They do operational audits, sometimes compliance, IT, financial audits. Okay. Now, there are instances where organizations may choose to outsource internal audit. I forgot to put them here. You can find where to write outsourcing internal audit.
Yes.
Outsourcing, I hope we are familiar with outsourcing, where you are going to contract for services outside the organization. So in this case, you are looking at internal audit. So the benefits of outsourcing include: one, it saves the company the staff recruitment costs. Two, sometimes the outsourced auditors have a broader range of skills. They could be actually IT experts. The other is outsourcing is very economical for smaller entities or organizations. What do you think are the possible challenges or disadvantages of outsourcing an internal audit function?
There might be a challenge with the confidentiality.
Very good. Confidentiality. Yes.
Because you give them your information, they might not observe that concept.
Yes, you should note that. Very good. Confidentiality. Internal auditors provided by an external audit firm, they will be expected to maintain complete confidentiality. However, sometimes the risks are there. Information might leak. Conflict of interest. The other disadvantage is conflict of interest. Sometimes if you are an external auditor who is also providing internal audit services to a single client, there would be possible conflict of interest, which causes what? Self-interest threats. And what else? It actually impairs the independence and objectivity. The other issue is the staff which are provided by an external audit firm or consultancy firm change yearly, and that means every time you get new staff, they will not understand the processes. But if you have an in-house internal audit function, they will understand the processes better. Then control. If you outsource, control will be lost, because the in-house internal audit function the organization shall have control, will always have control over the staff and the activity itself. But when it is outsourced, the control may not be there. Or it may not be as adequate as expected. I hope you have made some notes, because I might not repeat. We don't have time. Maybe those ones of June I might repeat, but for March I may not. We shall just interact in revision. Is it okay?
Yes.
Is it okay?
Yes.
But then, what are some of the similarities between internal audit and external audit?
The similarities of internal audit, they both carry on work to assist the company meet its objectives. They carry out assurance services that help the company to meet its objectives.
Yes, good. Both auditors are interested in detection of errors and fraud. Both external and internal auditors, they are concerned with
Yes.
detecting fraud and errors. And both auditors are also concerned with the safety of the company assets.
Yes.
They are all interested in the strength of the internal control systems of an organization.
Yes.
Both internal and external auditors are interested in ensuring that the company, interested in seeing that the company keeps adequate accounting records, proper books of accounts.
Both parties, internal auditor and the external auditors, they carry on work guided by the ISS and the international reporting standards.
Oh, no. Now, the internal audit standards is actually not ISAs, not ISA. The standards of internal audit are called IPPF. They are in the IPPF. IPPF is the International Professional Practices Framework. Now, in the IPPF, we have what we call the attribute standards, and then the performance standards. Now, those are standards that are specific for internal auditing. IPPF is International Professional Practices Framework for the professional practice of internal auditing. So, in other words, the profession of internal auditing is a profession in itself. Okay. It has its own standards. They are not the ISAs. ISAs, those ones are for external auditors.
Yes.
But as an external auditor, still you can offer internal audit services. That means you need to have the knowledge of the IPPF. If you do not have, you can have an expert on your team. Any question?
So far now, for me, I don't have anything to ask. Apart from...
What about other members? Are they on or they are out? Let me check. Paul?
Yes.
I can't hear them. Maybe they will join us later. So let's look at money laundering.
But I see... Tony is around. I see Robert is also around.
The lady is out.
I don't see her on board.
Okay, it's fine. So that is internal audit. What is beyond that, we shall be looking at revision.
Yes.
But that is internal audit. Like I started in the beginning, every audit must be planned. There should be audit objectives. Those objectives are derived from the risk assessment the internal auditors make, depending on the internal audit activity engagement, by defining the scope of the work in there. So money laundering is one of the current developments in the profession, and the ICPAU has also interested itself in it. It is a process where the criminals conceal the origin and the true source of the funds from the criminal activity. This area has been examined, although it has been missing, I think, in the past 3 sittings. I've not seen it. Maybe I will check again. But it is part of the syllabus. You need to be aware. It is clustered in 3 stages. Money laundering. It starts with placement. Placement, first of all, that's where the funds are introduced in the financial system. They are usually made maybe in small cash deposits or several transfers. Okay. Now, when that is done, the next stage is layering. Now, at layering stage, those criminals are trying to confuse the audit trail. Okay. They can decide to transfer money from offshore from Uganda. They send it to India. It comes back. So those transfers, those are some of the indicators of money laundering. If you are seeing several transfers of funds. Now, in Ugandan case, the Institute of the Financial Intelligence Authority came up with a figure of 20 million. For them, they believe that when there is a transfer above 20 million, that one is an indicator of money laundering. Of course, it has its own challenges. They have been debates and the challenges on that amount. They have questioned it, the basis of arriving at 20 million. They have not even given an explanation. But at the moment, it is 20 million in our anti-money laundering laws. And for the financial institutions, it is very key. Banking, microfinance, insurance, you must actually render your reports to the authority on a routine basis. Financial Intelligence Authority. Okay. Integration. This is now where the funds which are from the criminal activities are being cleaned. They are being cleaned. They are turning out to be legitimate, to be genuine in the economy. So this is a very difficult stage. If a money launderer reaches the integration stage, sometimes you may not be able to curb the vice. But if you can curb the vice at placement and layering, there it is, you are safer. But if you can't detect at that level, it would be very hard. Okay. So it is not a big area. Question might be there 3 marks, 6 marks, or 10 marks. So you need to know this area, stages of money laundering. Maybe quantities of an anti-money laundering program. This one I've not seen a question on it, but you may just have the general knowledge on the program. First of all, you must have an anti-money laundering officer. Of course, at the moment, there should be any anti-money laundering officer in every institution, financial institution, to report about money laundering. That can be a person even with another role. In an audit firm, you may also have a staff who is also responsible for that areas such that they can carry out research and make adequate reports, okay, to the authority. There is something in money laundering called tipping off. Have you ever heard about it?
Tipping off, like whistleblowing?
Yes. Now, tipping off is not acceptable. If you are an auditor, you have gone to audit a client, and then you get to learn indicators of money laundering, and you get to know the responsible party, who could be maybe a director. You are not supposed to go and tip off the director, to tell that director. Sometimes, of course, here you are looking at a scenario where you go and tip off the person, and maybe you get a benefit. The guy gives you some money such that you don't report. So it is illegal for you to tip off, because when you tip off a criminal, the criminal disappears. Not so.
Exactly.
Yeah. So tipping off is not allowed. So the other is the customer identification procedures. That is CDD. Who can define CDD or KYC? Have you heard about such acronyms in the market of late?
Yes.
Know your customer.
Yes, know your customer, and then customer do what? Diligence. That's why when you go to open a bank account right now, they ask for national ID and all that. Not only banking, it has gone across several organizations. They want to identify who are you. Even if you are registering a business, usually you have to indicate the source of funds, all that. So that is a procedure to camp money laundering. Okay. Record keeping. Enhanced record keeping. How do you do that? Of course, you are going to have maybe audited accounts, which should be kept for at least 5 years. Communication. Let people know about money laundering. Let it train people about money laundering in the organization. Teach them about indicators of money laundering, such that anyone can be able to report, not necessarily at the time when you are bringing in an external auditor. Is that clear? Yes, controls are very key in an organization. If there are controls, it is also a step to curbing money laundering. Probably you can have a control that in your maybe in your system you cannot transfer amounts beyond 100 million without approval of senior management and the board. Maybe for you to transfer 700 million to some account, probably the head of the finance committee or whatever of the board should be able to approve. So those are controls. And then there should be monitoring systems in the organization. We have already looked at due diligence, but you can also screen your clients in regards to money laundering activities. Okay. It is as short as that. I want us to have a break of 10 minutes. Is it in order? Then we come back.
Okay.
A break of 10 minutes. Then we come back and we go through fraud. Of course, my intention today was to finish internal audit and then look through money laundering and fraud. Money laundering and fraud, those are the current issues, one of the current areas in the auditing profession. You will forgive me if I'm in a hurry or the speed, but I know the date of your exam is very near. You actually have 1 month, I think. Yeah. Have you seen the timetable?
I've not seen it yet, but I'm to see it because it's not yet out. I don't know whether it's out. The last time I checked on the website, it wasn't there.
Should be around 16th, I think. 16th March.
Okay. But again,
I'll confirm. Yes.
I do request the notes that you have just discussed. You wire them via mail immediately so that we can get the proper footage. And probably if the notes we are to discuss on a Sunday, you also wire them too so that you can be able to print in time.
Yeah, actually, I was thinking, I send them tomorrow at once, but maybe let me first send this today, and then
Yes.
because on Sunday I have not yet chosen the topic for Sunday, so I'm still
But on
studying
Sunday,
the topics. Yes,
on Sunday you said you were gonna cover group audits.
this Sunday.
Yes.
Yeah, I was having it that I thought it was Friday, so that
This
means
Sunday.
I talked of that means we can cover group audits on a Sunday. Then I look for another topic for the other. I be looking for the Friday topic. That's okay.
Yes.
So I
And
will share.
then we do on Sunday we shall do group audits, I beg, and we do one question about the planning, risks management, audit risks.
Yeah, that one will be that will be daily bread. Every meeting we shall be looking at that.
Okay.
But then about other members, have you been able to attempt my numbers apart from Paul? Paul, let me forward right now.
Okay.
Tony, did you attempt the questions?
Yes.
That's very good. Where is Aisha? Hello?
Yes.
Do you know Aisha?
Aisha, I don't know her.
I sent her a message, the link. She just said well received, but she has not joined.
Those
So,
are the challenges we might discuss with time as.
yes?
I'm saying those are the challenges that we might discuss on a Sunday if she comes on board physically.
I talked to Winnie. We shall have a class representative who will be coordinating. And maybe you'll come up with a WhatsApp group.
WhatsApp has challenges with it, but I think we shall move.
Okay. So, who is our timekeeper for now? Paul, can you be the timekeeper?
We are giving a break of how many minutes?
10 minutes.
10 minutes are many, maybe 5.
5.
We are looking at when are we ending this lecture?
We had planned to end at 8:30. I suggested 9, but remember I suggested 8:30.
Even 8:30 is still long, but now we need to come back at 7:23.
Are you sure?
Those are the 5 minutes because it's 19
No,
minutes past 7.
not 56. Check your clock.
Oh God, no. I was seeing the hours that we are spending in lecture 56. Let's come back at 8 sharp.
1 minute past 8. We are breaking off at 56 past.
No, 8
Carlos.
sharp. Let's come 8 sharp.
Okay, please. It's okay.
I beg members, I'm not a dictator, but inconvenience with regards to time.
It's okay.
Okay.